Hey, quick update here. I'm at the condo that I had listed this last little bit, and today is a closing day, so we're excited about that. But I just want to give a little marketing update and a little highlights. So we put this place on the market. It was on the market for about 3 weeks. We listed it for 500. We got an offer for 490. Things went pretty smooth and pretty typical actually for the housing market right now. So I've had a lot of people ask me this question of why are housing prices uh, still so high, and do we expect housing prices to stay high or do we expect them to go down? Are there going to be any deals on the market because of all the economic impacts of COVID? And so I just want to share a couple thoughts on that. First of all, it's really a question of supply and demand. And right now, there's a very, very low supply of homes. A lot of homeowners have decided to not list their homes or just to stay put for the time being. And so you have very low inventory on the market. So the supply side is low, which creates a upward pressure on price. The other side of the equation is demand. And because of the extremely low interest rates right now, um, there is a really strong demand for homes. And so you see upward pressure on price from demand as well. And so we see prices sustaining. We also have a pushback in inventory timing wise with the significant pullback when real estate wasn't really able to be listed or shown at the early couple weeks of COVID, pushing back to what we're seeing now. We're actually exceeding prior years' number of homes pending when you look at a weekly view of that. Another thing or aspect of the real estate world is the impact of COVID. And so when we look at the headlines of what we're seeing in the news and the articles and the impact and the unemployment rate, a lot of the people that are impacted by COVID are not actually part of the population shopping for homes. And especially here in the Seattle area, with a high or a disproportionate number of tech jobs, we see the people with the ability to work from home continue to have employment and continue to shop for homes themselves. So they're not economically impacted by the effects of COVID. And so what we're seeing here is strong demand, limited supply, and sustained pressure. How long will that continue? Well, it just depends on how those different variables continue. So as we see interest rates stay really, really low, I've heard of loans being closed this week at 2.75 on a conventional loan. And so that's the lowest I've ever seen for a 30-year fixed loan. So that's going to continue to increase the supply, and so the demand. But the supply side, it just depends on people interested in selling their homes, and right now there's fewer interested and a lot of people interested in buying, and so the supply side stays constrained and the demand side is elevated. So both those are putting upward pressure on price, and for the formidable future. And with forbearance, people aren't forced to sell. So people that can't afford to stay in their homes they're gonna be able to stay in their homes for the next year, right? So we're not going to see any of that inventory coming on the market. Typically, you would see some of it come on the market, but now we're not seeing that right now. So that's going to be held out for over a year before you start seeing that start to go through the process. So people hoping for a deal on real estate or impact or a lowering of prices are likely 2 years out if that is the way it plays out. So it's really a really big unknown, but for the near term or for the next year or so, you're going to see continued pressure on the supply and demand. Anyways, hopefully that was helpful. If you have any questions, I'd love to help you out. Give me a call. Thanks.